Should you or should you not buy a stock before it splits? Now, we've talked about stock splits before: Tesla, Nvidia, Microsoft, Google, Amazon, you name it. Plenty of big tech companies, plenty of big companies have had their stock split. What exactly happens? Well, the value of the company doesn't change. That's the most important part. If you think that just because a company says that they're going to have a 10-to-1 stock split, does not mean that the company that is worth $10 billion is now worth $1 billion. No, the company will still be worth $10 billion. It's just as a pizza pie, for example. You have a whole pie, you cut it into 4, or you cut it into 6 or 8 or 10 pieces. It's still the same pie, just more people will get slices. Same thing here with stock splits. So, Lam Research, a huge player in the semiconductor industry, announced, first of all, a $10 billion share buyback program and a 10-for-1 stock split. So they say here, the share repurchase authorization announced today will execute over an indeterminate period of time and is consistent with our plan to return 75 to 100% of free cash flow to stockholders in the form of dividends and share buybacks. Furthermore, the stock split announced today will enable a larger proportion of Lam's worldwide employee base to participate in the company's employee stock plans. That's also an important point to mention. Now, the stock split is expected to be effective after market close on Wednesday, October 2nd, 2024, for stockholders of record at that time. Lam Research common stock will begin trading on a post-split basis at the market open on Thursday, October 3rd, 2024, under the company's existing trading symbol, LRCX. And so up until October 2nd, the stock will be worth, I believe it's over $900 or so. After the stock split, it will be at $90, but the value of the whole business still remains the same. Now, for those of you that don't know what Lam Research is, what they're doing, what industry they're playing in, I'll explain in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, first of all, who are the companies that make semiconductor fab equipment? We have Lam Research as one of them, ASML, the biggest one out there, one of the biggest monopolies on this planet, let's be honest. We got Applied Materials, TEL, which is a Japanese company, and KLA. Basically, if you're looking for wafer fabrication equipment, you'll have to go to one of those companies. Of course, depending on what you specialize in. Now, Lam Research specifically supplies the tool that make the chips we use in everything from smartphones to laptops possible. They focus on wafer fabrication equipment, specifically for the front end of the process. This involves etching and depositing thin films to create the transistors and circuits on a silicon wafer. In the bigger picture of the semiconductor industry, Lam Research is a key player enabling miniaturization and advancements of chips. Their tools are essential for building the complex circuitry on modern chips. Now, with regards to the front end of the process, what does that mean? Well, those refer to all the steps involved in creating the integrated circuits on a silicon wafer. It's basically building the intricate circuitry on the wafer itself. And so right now, let's have a major overlook of the stock and look at their recent earnings report. By the way, they're also paying a dividend. So they have a 0.84% dividend yield. The shareholder yield is a bit higher, 3.61%. Why is that? Well, because the buyback yield is 2.6%. If you bought these shares 10 years ago, for example, you will be getting 18 cents. You're now getting $2. Quite a lot of growth in the last 10, 5, 3, and even the last year or so. The annualized growth here for dividend growth is quite something. If we look at valuation, it has a forward PE of 28.5 times, EV to sales 7.5 times, and EV to EBITDA 23.4 times. If you look at the average analyst price target, that sits just 2.84% higher than the price we're at today. If you look at the analyst estimates for fiscal year 2024, you'll see sales declining as well as EPS, but a reacceleration in fiscal year 25 and fiscal year 26 top and bottom line. And as I just said, this company has been buying back their shares. In the last 5 years, shares outstanding have dropped close to 13%. Free cash flow per share has grown quite nicely as well. And so looking at their recent report, they first start off with the calendar year 2024, wafer fabrication equipment will come in at the low to mid $90 billion. Previously, their outlook was between $85 to $89 billion. So a revision on the upside. Why is that? Well, the prior view primarily driven by additional lithography shipments into China, no meaningful change in Lam's overall calendar year 2024 revenue profile expectations. For this quarter, revenue was $3.79 billion compared to $3.76 billion a quarter ago. With regards to earnings per share, that came in at $7.79 compared to $7.52 a quarter before. Now, with regards to revenue, it's split into two segments. One is systems revenue that came in at $2.39 billion and customer support related revenue and others that came in at $1.39 billion. System revenue includes sales of the new leading edge equipment and deposition, etch, and clean markets. Customer support related revenue includes sales of customer service, spares, upgrade, and non-leading edge equipment from their Reliant product line. With regards to gross margin as a percentage of revenue, that's at 47.5%, up 70 basis points quarter over quarter. Operating income is down 20 basis points quarter over quarter as a percentage of revenue. They also told us that DRAM remains strong with the wafer fabrication equipment spending driven by growing demand for high bandwidth memory and sustained investment in domestic China. We've heard those comments already from one of the huge players in memory, which is Micron. As for the mix in revenue and by region, so the largest part here comes from foundry, then DRAM memory is 44%, you got 21% non-volatile memory, and 12% logic and others. Now, one of the key risks here, in my opinion, is as follows, and you can clearly see this in revenue by region, is that 42% comes from China, 24% from Korea, 9% from Japan, 9% from Taiwan, and only 6% and 5% come from US, Europe, and Southeast Asia. So yes, you might say that if tensions rise in that region, they're going to take quite a big hit because here China and Taiwan make up over 51% of revenue. Then with regards to the guidance for next quarter, they expect revenue to come at $3.8 billion plus minus $300 million, non-GAAP gross margin at around 47.5% plus minus 1%, non-GAAP operating margin 29.5%, and non-GAAP earnings per share $7.50, also plus minus 75 cents, which of course means an increase quarter over quarter. Now, we've talked about a lot of chip makers, a lot of semiconductor companies on this channel, but in my opinion, a company like Lam, a company like ASML, a company like Applied Material are of extreme importance, and especially when we're talking about memory, which in my opinion, that growth cycle is still early days. We've talked about Micron before. I think Micron's growth cycle is just starting. Everybody has been focused on data center chips, on CPUs, on GPUs before. Nobody was really paying attention on memory. Plus there were some supply chain issues as well, but I do think that memory will start to show signs of strength, especially already starting in 2024. Companies like Lam, like Micron as well, and some others out there will definitely benefit from that. Now, looking specifically at the stock right now, you can actually see the perfect cup and handle pattern that started December 21 and let's say ended October 2023. And then we got that huge breakout, which was also, by the way, perfect rebound on the 200-day moving average. What's the cup and handle pattern? Well, it's basically this, the cup and then the handle, and then you go up. Of course, the business fundamentals have to justify such a jump. Right now, stock is nearing back. Right now, the stock is pretty close to its all-time highs, which was around $8,000. Back then, the stock was overbought. Right now, we're not overbought yet. We've seen what happens with plenty of other stocks when they announce a stock split. When the stock split is getting closer, the stock usually goes up. Why is that? Don't ask me, it's just a market thing. But fundamentally, business-wise, nothing changes. Just good to know if you are a trader. So overall, that's about it. Quick overview of what this company does, quick overview on the news that came out, buybacks, stock split. Hopefully you enjoy this type of videos. If you do, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.